Yo, Daddy Lumba ɔse ɛyɛ sikasɛm. Yɛanyɛ sikasɛm yi a mpanyinfoɔ so bɔne a ɛyɛ nkɔraa nti yɛmmɛki sure sɛ yɛyɛ sikasɛm yie. Ɛnɛ yɛ program no ɛyɛ soronko koraa so ɛnɛ yɛn nyinaa nim sɛ yɛwɔ tax season nti yɛbɛdidi nkɔmmɔ kakra afa yɛ taxes ho. They say tax season 2024, what you need to know and looking ahead to 2025. In any say tax season a bibia through January and February, March, ekosi epua na that year na ye abri gidi. But if you tax season, you see a change your friend saying the season no or say you start year juma or the tax year no ho asana season number and you be church ni na mu. Ewo CPA Daniel Lai ewa ha enia obeboain na yetimi akyerɛkyerɛ nneɛma bebree mu when it comes to taxes, filing, and the season and the year and everything. You know, yɛnhwɛ sɛ sɛnea ebesi ayɛ. Mɛkyerɛkyerɛ nneɛma mu kakraa bi na efiri hɔ kɔ no na wɔ questions ne ade a wɔde ba a ebetumi aboa. Wɔde to chat mu so ebetumi aboa. Already amafoɔ bi ama me questions already a ɛwɔ sɛ metumi ne enia dane ɛyɛ ho koraa adwuma nsa. Wɔ de a wotumi de ka ho na nti Danny, what's your name?
Yeah, me too, Kampa. But I'm still in there.
Yes, because say see no the other time. If some of us sending more questions, I bring on the side crowd already. It's you know, mostly when you probably maybe call it by yet call it and mostly chat or questions or on T. Maybe some more questions are maybe
sure.
Yo, she said it last time. Yeah, man, me go over this now for you know. Tax season 2024. What you need to know and looking ahead to 2025. No, and you become one. No, and yebeka ho asem. You show more. Obi say the tax season no cry no. Any de hen. In them say Drew say the make no na ye ho prepare. Nti yem se kakra be start a fair free no ye deadline 2024 tax season deadline April 15th and a deadline omo bi say extension no you say obetime bi say extension obi say omo bi say on October 15th and omo deadline obi say extension obi say extension in say bibia the year you name so the IRS car uncle Sam on fan ho nche obi say extension and I say one ade ne car store no as aka no and I say any interest egusu etwen and nneɛma bi kakra so change ɛwɔ 2024 tax season no and also yɛbɛhwɛ ne aka ho asɛm fast standard deduction ne saa nneɛma nyinaa na tax bracket so ho change kakra to be say when can I file my taxes the tax season no the obiara timi obetimi afile na nneɛma a yɛhia wɔsɛ yɛtimi start to see yɛde bɛfile ɛduru say at this time by now, say when you name was said W2 for someone you W2 1099 was when you're 1099. Nema can want to say mortgage, you'll be our house, our mortgage, your friends' interest a statement. Now we will be our investors soon as animal also here and our charitable contribution statements. Those things no, I think at this time no on Saka. First Nanka mostly no about mail to say online to no be bro honma with me printing online. Say at this point on some kind of tax near man I say or mortgage statement, those things now you might want to get in touch with the company. It would more better say with me log in or with me print it. They will say no so it me tax year and versus tax season. You may say you know to changeable by the tax year and the tax season difference kakra tax year no a year na year file tax no. Sorry, a year na year juma no income ni nyaye no na tax season no the year na year file and to say no year file 2024 taxes which is 2023 tax year and then it's hard time in the income ni nyaye into the difference no to say a tax year na ye ka year na year juma na nkasa and the tax season no the year na year file no usually every year biya no you file it the year win. So share 2024 you start year juma nche bia afini start year juma. But 2023 you we no. And income brackets and also influence the bracket when it comes to income. The bracket na and the income no to say bia the amount I'll make na income I was here tell no baby a war and the bracket I will be a fan so we 75,000 or 2022 percent tax tax rate and a tax bracket no. It doesn't mean say flat rate. That's 75,000 in a 22 percent. I'm say move cheche. I'm share. I'm sharing city. It is even so 2,000 and we are 75,000. 75,000. 10% of it now started from. I'm talking of your friend saying the taxable income after the BNF started see a total tax now 10% ever started from 0 to 11%. And 12% from 11 to 44. Now 20%, 22% now 44 to 75. So Shima say combining na even though tax bracket in your 22, na in drew 22 na kasapa calculate this win na kama be 17 and abisa. That is and also the standard deduction. So this year, I'm say increase kakra and also last year, your friend saying last year and this year the increase no and a war tax deduction, tax credit, no a kakra when it comes to tax deduction, tax credit, you should know be brave, but tax credit and tax that deduction both no a decrease total the total that you pay in taxes. But difference we are in this year, Jumano. Tax credit is dollar to dollar a reduce of your money that while the tax deduction will be decrease your taxable income. You know, lower taxes a bill. So but in nano reduce your taxes. Am I when it comes to say influence tax deduction, standard deduction, any itemized. The itemized one, no, say wow, bit me, any mortgage, interest now between ne whole donations, this animal nano. So wow, bit me, yes, animal government, I might be say, and only a standard or the amount out to swam. It usually or your friends with CP and now tax preparer or cabo mo hwede e good they will higher obenya more money and as be reduce taxes no more and of amount most shemu you move be on ya in do the standard na government dey am no it usually go with that na even taxable or tax credit no so your refundable and non-refundable one in rather than the chichi mama the one side bit me aboy me retire the charitable deductions medical deductions business deductions 10 and 9 for no for almost so and earn income tax credit very low income the government will be because it me more so reduce next one a child care child tax credit and name say am I eating you will be brief say be tax credit but will be because of that your friends and dependable child child care and also care credit and mostly elderly so it and so a boy made me reduce educational credit student loans which are interest near the one and inflation reduction act credit and also mostly this is for big businesses and 10 and 9 for so many creditor almost so retirement 401ks near the tax defers a womb bit me reduce you pay taxes later on these are some of the a year bit me now said in America you be look ahead if we are share a year way when it comes to taxes say the tax na yet and your taxable income and your main the taxable income so send the taxable income so is it here taxable taxable income kakana fee yɛmfa questions and to board na ɛnɛ deɛ ɛwɔ questions bebree ebisa. See, so your taxable say what is taxable income? Taxable income. Taxable income. Bibia no ne ase deɛ after ye bibia saa nneɛma no nyinaa na deɛ the government no deɛ ye si wɔ sɛ as ɔyɛ bibia wie no ɛno na Uncle Sam ɔte ne deɛ free mu no ɛno ne the taxable one no nti no it is same as what earnings count as a taxable income. Mostly no earn income ɛyɛ bibia as wayɛ adwuma anaasɛ investment ni ade no, those are the ones are your tax. Enye bibia na tax. These are some of the things. So nyama bi also say make any bibia na tax. Na nyama bebree so a your tax wo ho. You'll be surprised about saa nyama ni na na ebehwehwe ni nyina mu. What the count as it doesn't count as a taxes. Usually account as taxes, cancel or forgiving debt. Say you hear people renew our debt, they are chill. And I say you're writing it off. You're now fee say it's counted as a year, a bit me a tax or a profit from sales of tax of stocks or investment, and also a BBB a bit tax, a bit me a tax on interest, dividend. So I mean now be a bit me a tax or unemployment compensation. If you say my unemployment, and one no a taxable income. Now union strike benefits, gains from virtual currency, it's a Bitcoin. Nina a taxi or rent or a friend say property, investment property, and also in a royalty. So what true book be na be at Amazon na interest a profit near the and also is taxable. Proceed from sale from ton Diana Bisa, and also taxable. Share the and also any taxable accident when you accident when you have to say insurance settlements and no and maybe cash rebates to say rewards names I no and yet child support alimony those federal income tax refund your tax I file yet too much into your file we and second and on foster care payment and also say in your taxable inheritance and no inheritance na to a certain I think it's about 5 million over. And I'm say a taxable. Many sure, but Bible say more than that. It's around 5 or more. Life insurance payout is the same as when insurance is not taxable. Scholarships, and a friends scholarships. No, to a certain point. We use a different way. Be a bit more taxable. What the scholarship now? Yakotoka. Your friends say a bit taxable. Now welfare benefit na veteran. A benefit, those are not taxable. Deduction anyway, I can't want to me and never to your wow, it may reduce your taxes or signing na brackets and also you can't want some clarify. It overall no, these are the things that you bet your taxi or your taxi and the end taxi and how your friends say taxes is it at this point, so the way you be two my bema in ya dani amai. But mami bisa bro, we introduce no kakra na fe no ya fair free hano. Was I may pull up the questions na ban, introduce no kakra na fe yen free.
Hello, everyone. Your friend is Daniel Lai, and I am the owner of D Lai and Associate. I prepare individual tax bookkeeping for small businesses, and also I am a certified public accountant. So basically, that's what I do.
Oh, okay.
I would encourage everyone to keep your questions coming. I mean, we would address as many as possible, so at least we can all understand at least the main things that we need to know before we prepare our taxes or give it to a professional, or even if we prepare it ourselves.
Before say I'm on for be no a few questions for Hanuma betting. The first question about is how can I reduce my tax bill? How can I reduce my tax bill? And then I'm a tax bill, so let me at so. You say tax bill echo for my inya kakra to botum. Tidani, question is how can I reduce my tax bill?
That's a multi-million dollar question. Uh, how can I reduce my tax bill? So everyone, it depends on your tax situation, but there are a number of things that you can do to reduce your tax bill depending on your tax situation. If you are single, for instance, if you are single or you are single and you don't have any kids, the child tax credit is one way, of course, as my brother mentioned, that people use to reduce their tax bill. People also, if you can be single or married, and there are a lot of credits that you can get, like if you're a student or you take up a course in college and you enrolled in more than half time, in terms of the credit that is required by the school, you did even half of the full-time students coursework, you are likely to get some credit, the American Opportunity Credit or the Lifetime Learning Credit. So depending on your situation, if you're a student, you can, or you embark on any degree program, you can use that to reduce your tax bill. That's also one way that you can, use. That means that it's also great for both married and, single. Is your 401k, right? Depending
Mhm.
on the tax situation, if you push, you can have your traditional deduction. We have the Roth and also the traditional. If you are not doing the Roth and you are doing the traditional deduction, where you tell your company to, or you tell the government that, hey, you know what, let me push this, some of my income salary to my 401k. Don't tax me now. Tax me when I'm retiring. So that portion of money that you take out from your salary and you put in your 401k at the end of the year during tax season, the entire amount would not be taxed. So that is also one mechanism that, depending on your tax situation, we have people who would want to defer a lot more because they don't want to really be taxed so much in the current year. So that is also another way you can defer your, you can reduce your tax liability. Apart from having a company, there is also individual IRA that you can do. Most of the times, even after the end of the year. So we are, tax year is 2023, right? We are in 2024. They give you a time frame in even 2024 where you can push some money into your individual IRA, and that you can defer the taxes on it. I think through the mid year or mid of January, that can also reduce your tax liability. Other things too you can do is, we have people who have a lot of items, like they have a lot of stuff in their closet. They have bicycles, they have old cars, they have a lot of clothes, they have a lot of items that they are not using. They use just once a while, or for some, they've just piled them up in their homes and they are not using those items. You can donate them to a 501c entity, and that could also, once you donate them, there are means to value them. It could be the replaceable value or the fair market value of those items and all that. Those charitable donation, like my brother mentioned, can also use that to reduce your tax liability. That is, if you are able to add those donation and those elements to your other expenses where it's greater or higher than it's bigger than your standard deduction, you can reduce your tax burden, right? And if you are renting, and another means you're renting, you're just paying the rent, depending on your tax situation. Once you acquire, you get a house, okay, the interest element, okay, can be used to reduce your tax burden. So in terms of how you can reduce your what we call it, your tax burden, these are some of the ways, but every individual, every case is slightly different. It's always great for you to do the basic, but also to sit down with a professional to look into your tax situation and would be able to advise you that no, you can cut here, you can also do A or B to make sure that you cut down on your taxes.
Thank you so much. And say yes, Sister Bako or the question at two board already. I say Patromeva. Say I'm saying the question any say do yeah, can I do you qualify for SSI and pension if you file 1099 as a sole proprietor? Then let me say no test, yeah, check it. Yo, so the question is, do you qualify for SSI and pension if you file 1099 as a sole proprietor? Yeah, can you hear me, Danny? Yeah, can you hear me?
Yeah, I can hear
Oh,
you. Okay. So to get a question very well, do you qualify for Social Security and pension if you file 1099 as a sole proprietor? So talking about let's break it down. If you file 1099 as a sole proprietor, how how do you mean? So a sole proprietor filing 1099 is a 1099 that you filed on behalf of wages that you have paid. For instance, I have a business, right? If somebody helps, I have like someone who also helps in filing the taxes, and at the end of the month, I pay. Let's take the year. I pay the person 12,000 because that amount that I've paid that individual who assists in my business is more than $600. I am required to file 1099. So, are you referring to this 1099 filing as a sole proprietor? It's a little
a little tricky
yeah,
over there,
yeah,
right?
it's a little tricky, and I'm trying to really get it very well.
Yeah, if you can come again and
Yeah,
let it
more
be
information.
that will be so the question was let me see, let me make sure. I just wanted to, do you qualify for SSI and pension if you file 1099 as a sole proprietor? And so there's too much combination here. Yeah, the
Yeah,
SS
but,
and the
but
pension.
generally, there are a lot of rules that surround when you are paying, for instance, social security and pension. You cannot just easily qualify at the point of, you know, when you hit the ages of 65 or 67 and you retire, the government expects you not to really work so much. There are caps to that. So
Mhm.
if that's what you're referring to, if social security, you need a cap in terms of your income. So that's why you see a lot of these elderly working in places where they don't really make so much because they don't want to be taxed. If you are an employer and you are working and making, to the extent where you are giving 1099, I am presuming that you are making, good income. So definitely with that, if your income is above certain threshold, you would not qualify for social security and pension because you are making money above that threshold. So generally, you wouldn't automatically qualify for that.
Okay. Obi, if you can make it more clear, we're still here to, get your answer. The next question that I had on the side is say, what kind of deduction do I qualify for? I think you're talking in terms of, in general terms, what kind of deduction do I qualify for? I know, everybody's situation might be different, but in general, what are the common deduction that individual might qualify for?
Okay. So okay, let me try and then break down the deduction. So when we talk about deduction in terms of for tax purposes, we have two main deductions, right? You can have itemized deduction, or you can have the standard deduction. And this standard deduction is generally taken from your taxes, right? Your taxable income. So if you make so much money before the government applies taxes on it, they will take out the standard deduction or the itemized deduction amount that you have. Generally, the one that will result in lower tax liability is what you are supposed to use, or if you're filing with a professional, that professional is likely to use. The standard deduction for this year, depending on your tax filing status, differs, right? As my brother shared with us earlier, if you're filing married filing jointly, it's around 27,000, 700 or 200, and if you are single, it is half of it. So if you want to really use itemized deduction, your deduction must be higher. Your itemized deduction must be higher than what the standard that the government is giving you. And some of the things that you can, choose to itemize, right? Or itemize include medical bills, your medical bills. Medical bills, with medical bills and dental expenses that you pay, if it is not reimbursed by your company, okay, those unreimbursed portion, okay, can be used, okay, to reduce your added as part of your itemized tax. But I need to let you know that there are rules to that, okay. The extent to which you can deduct is also, subject to your adjusted gross income. Okay, so if it's a percentage over your gross income. So generally, unless you really have a huge medical and dental expenses, you may not necessarily be able to use that, because it may not, be high enough above the percentage greater than your AGI, or adjusted gross income.
Gross
Another
income.
thing Another thing that generally people can deduct is home mortgage interest. So if you have a home, or you own a home, you may be able to deduct the interest that you pay on the mortgage. Okay, there are limits to that as well, but generally that gives you a chance to be able. So that's one of the things you can deduct. Let's talk about student loan interest. If you have a student loan, okay, you will be able to deduct up to about 2,500, okay, of the interest that you paid on your qualified student loans. And this one too is subject to certain income limits. Okay, there is also educator expenses, right? That depending on your situation, if you are a teacher or an educator, there are certain benefits that you may qualify for. Okay, that is not huge, but up to at least 250 of out of pocket expenses, on classroom supplies, you can deduct. Okay, we already talked about the charitable contributions.
Contributions.
So donations that you make to qualified charitable organizations. Is not every qualified uh, charitable organization. The organization must be a 501c entity. All right, like the Salvation Army, and we have some here to something Mary, and all those goodwill entities that they can give you receipt for that. Yes, you can use it. Even church, right? Your church, if they give you a statement, charitable contribution can be both cash and non-cash. You can also deduct that, and then also
So
to
if the church doesn't have 501c, that means you can't use that to file. Is that what you,
uh,
or whoever you donate, if they don't
yeah,
have 501c?
exactly. If it's not a 501c entity, then you can't, because the only reason why you are able to deduct charitable deduct uh, contributions you make is that charitable entity must be a qualified entity. You can't give to any entity and use it to deduct. If they are not 501c, in other words, not for profit, and registered with the IRS, where they are recognized by the IRS as a qualified charitable entity, you will not be able to. You will not be able to. So it's important. That's why when you're filing your taxes, they will ask you for the name, the entity, and all those things. Yeah, and to some extent, state and local taxes. Yeah, some of
Okay.
it, no, there are caps to that, but yeah, to some extent, you can deduct some of those things. Yeah.
Yeah. Okay. So what about a child and dependent care credit? How far can you go on that?
All right. So with a child tax credit, that too generally it has a cap, right? That's also something that is a credit, right?
Mhm.
It may not necessarily be a deduction. That is a credit that reduces your tax liability or tax burden. So with that, depending on the number of kids that you have, the amount that you can deduct per child is $2,000. So think about it. If you have three kids, we are talking about two times three, 6,000. But even with that, I need to stress that there are limits. Okay, every one of those benefits that you receive, there are limits to it. If you are a high income earner, you may not necessarily, it faces out. Okay, so if for instance you're filing with your wife, right, and you make
Mhm.
about above 400,000, okay, about 400,000, that means that you cannot really claim all that 2,000 per kid. But generally, from our, where we coming from, majority of the people are able to claim because they don't meet that income limit. So that's also something that you can deduct. And then talk about dependent care credit. That's also one. For instance, if you have a child, for you have a kid and you want to be able to work, and that one to the main condition is that it should be such that one, you paid to either an individual or an entity. The
Mhm.
entity, if you paid, you want to work, so you take your kid to daycare and you give them, it's an entity and give them money, you have to know their EIN or tax identification number for you to claim. Okay, it must be a qualified entity. If it's an individual, you can state the individual's name and all that. But the amount that you pay to these people, there you can deduct a portion of that, okay, from your income. That also gives you some deduction.
Yeah, our sister says he hates tax season as a sole proprietor. I think you're a sole proprietor. Sole proprietor, you shouldn't hit tax season, though, because there's so much you can write off, right?
That's
If
right.
I'm right, yeah. So as a sole proprietor, I don't think you should hit it. If you're earning income, that mom and the mom never say oh hit it more. So yeah, because I know it's a sole proprietors, they are doing good when it comes to because you most of the things you decide what to how much you paying and all that. Yeah, so
That's right.
don't,
That's
don't don't hit it too much. Just I say really yes, really. Yeah, that's why you have to call Daniel like na obechecho nneɛma bebree because as a sole proprietor that obetumi liability kakra because
yeah,
question wɔ ha nka baba nyama the reason why as a sole proprietor no you have more advantage than an income.
yeah. So let me really touch on this. Okay, if you are a sole proprietor and you haven't registered your entity, then I would agree with you that you would hate it. And I understand why you hate it, because you haven't taken advantage of your business. So first of all, you must have registered your entity.
And
If
let me step in a little bit here.
Yeah.
When you say register your entity, that doesn't mean say it has to be LLC in Kona, right?
No, 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 not at all. It doesn't
Uh,
have to be an
uh,
LLC alone. It doesn't have to
yes,
be an LLC. Okay, depend on, when it comes to registration, you have different ways to go about it. It can be an LLC, it can be an LLP, it can even be uh, what do we call it? There are different structures that you
registration
can
structure.
yeah, you can opt for, but generally you rather have an advantage. Okay, you have an advantage when you are a sole proprietor. One, you several, like, talk about the business losses. If you make a loss, right, that goes into your schedule C, business schedule C. That loss will reduce your tax burden. And then talk about, like, expenses, like when you have a home office where you can have some allocation of the expenses that you incur if it is home office, and that would reduce your tax burden. Talk about laptop. There are business expenses that you incur that you can also deduct, like you buy a laptop for your business, right? You can deduct. You give somebody money who is also helping you in the business, you can deduct. There are several things, like business registration, you can deduct. Taxes, you can deduct. Licenses, professional fees. So there are several things that you can deduct when you're a business person, okay, and that will reduce your tax burden. So as a matter of fact, IRS rather is very much concerned about you having a business. They
And
know
earning
that
income.
people, yeah, without any income, they know, people use that to reduce their tax burden. Okay, like brother Dan said, Dan Dick, or see, make sure you have documentation. You must definitely make sure you have documentation. Whatever you do, keep the document, decouple your business, right? Separate it from your personal activities. That way it's easier. And you need to be tracking things, right? Tracking things, whether you're using a cash basis or the accrual basis to do your account, track things. It would be great that you would even have a separate bank account for your business. That way you can really see what's going in and out, and then you are tracking it, closely. Thank you for that, Dan.
Yeah. Thanks for joining to Dan. Thanks for your contribution. So there's another question that says, should I itemize or claim the standard deduction? I think I touched a little bit of it, but if you bit me elaborate, a little bit more, can I do I itemize or claim the standard deduction? Uh,
Okay. So basically, talk about standard and then the itemized deduction. About more than 80% or 90% of people, go with the standard deduction. And the reason is that years back, the standard deduction was quite small.
mhm.
So people were able to itemize. And when I say small, for instance, let's take it, I'm just giving an example, right? Your entire income for the year was $10,000, all right? I'm giving just a normal example. The government gives you a standard deduction of 5,000. So what that means is that if the standard deduction is 5,000, for the government to tax you, right? Generally, the government is going to take the 5,000 out of your 10,000 income, and it will be left with 5,000. So that 5,000 would be the amount that would be subject to tax. Now, if you want to use the itemized deduction, it means that you must have qualified expenses. In this situation, qualified expenses that would be higher than the 5,000. Some of the qualified expenses were the things that we mentioned. For instance, you have a mortgage interest,
Is it me? Okay.
you have mortgage interest, right? Charitable contribution, all those elements that with medical, expenses, right? They all have some rules associated with them, right? And of course, the itemized deduction will be on Schedule 8. Great job, Dan. Will be on Schedule A. But when those expenses are, say, 6,000, then it means that you have to use the itemized deduction, because the itemized deduction would give you lower tax liability or taxable income. So it depends on your tax situation. Some can itemize and it will work well for them, and others standard deduction. But again, when you are itemizing, make sure that you have documentation where you can support, because it's IRS would generally go after people who itemized more than people who use the standard deduction, because that is standard, right? If you are saying your expenses are higher than the standard, then you must, be better prepared, as far as documentation goes.
So, but let me slide this in a little bit. IRS omit me, omit me. Let's say omit the tool whereby you use standard deduction, because the someone on my is a chance no. It had an omit me investigate you and I say the tool about the standard deduction. Is there something that is there a situation whereby this happened and
Oh, generally, if you receive any of those letters, and you use standard deduction and you receive an IRS letter, generally it may not be because you use a standard deduction. It may be, it's likely to be other elements other than the standard deduction, because that is what IRS has given you. So generally, that would not come with an issue. But maybe you claim some other things like child tax credit.
okay.
Okay, so
Okay.
like those, they are very much concerned. They want to make sure that indeed you qualify, or in any of the other credits like American opportunity credit, like all those end income, tax credit and all that. That's where they would, the focus will be. But you will not really have issues because you use standard deduction. No, you
Okay.
will not have an issue.
Yo, like I said, Dan, Dick, if you want to talk, it's nice. Link not to bit me. I'll batch you in. If you hit on that link, I'll batch you. You can talk if you want to. So another question was I say, how can I stay up to date with tax laws and changes? With them say, if you let me see, how can I stay up with your friend saying? The difference between way was another one prime say different people at the buy but in a different way. Say, what is the difference between marginal and effective tax rate? The marginal and effective tax rate, what is the difference? Then between
Let's some of those things, like the effective tax rate, it's easier to give use numbers to calculate, right? Let's talk about the effective tax rate. Okay, when you talk about the effective tax rate, you are looking at the overall, the example that I gave. For instance, I gave an example where you made an income of 10,000 and you are using the standard deduction. Let's take it's 5,000. So your taxable income is 5,000. That taxable income, which is 5,000, would now be subjected to the tax brackets. It doesn't mean that if you earn 5,000, they are taxing you maybe uh, 20% on the 5,000. No. Okay, the tax bracket is progressive, right? So let's take it from 0 to 11,000. If you make 0 to 11,000, you'll be taxed at 10%. So depending on your income, taxable income, they would just tax you. You apply the tax rate based on your the increments, okay, that you have. So for let's take you make your taxable income is 20,000. The first 11,000 will be subjected to a 10%, right? And then from the remaining 9,000, okay, would be subject to 12%. So at the end of the day, the amount of tax that you have, okay, the effective tax rate will be the average rate, okay, at which your total income is taxed. The average rate at which your total income is taxed is going to give you the effective tax rate, okay. But with the marginal tax rate, that has to do with the tax rate that is applied to your last dollar of your income. the tax rate that is applied to your last dollar, the last dollar of your income. That's the marginal rate. Okay, that usually basically it represents the percentage of your tax you would pay on an additional dollar of income. So the marginal tax rate is progressive, which means that would increase as your income also increases or goes up. Okay, so the additional tax that you pay would be your marginal tax rate. I wish I could share my screen and maybe, but that I hope that it's making sense. Some of those things are just better explained when I use numbers
When you
to
see, yeah,
do the calculation. But I think you should get what I mean. If
yeah,
you
I
have,
did put up.
we can touch base and then I'll just show you the calculations.
Sure. Thanks for joining, Dan.
Yeah, thank you, sir.
Good,
Okay.
good. Do you have anything to say about the difference? Yeah, we always hear tax. Your friends say effective tax rate and marginal tax. No, but maybe we can cry on my home. Yeah, but
Oh, yeah. So with your tax expert, right? So I person change my which message, but now we got question in the manner. Yeah.
okay, let's go.
Yeah. So Ayana, I'm say for more which an effective name, marginal no can you know. Now once a tax situation will be a situation different. Oh, and I'm and now on to me more like one straightforward answer because be about more than fit to specific situation.
Yeah.
About general highlights, but so what specific needs be a anytime you consult your tax or the same preparer and seek advice from them.
CPA.
Because be a situation a little bit different. But Mr. Daniel, with the Miami name, the question of all man and say or the same. So deduction, standard deduction.
Yeah.
Na say for no more can was. A bit about say obi kra no ne itemizing code and do standard deduction, but he will just have to pick the standard deduction, right?
Yes. Yes.
Then they know what you know to.
Yes, majority of the times, like with most taxes that I have filed for people, even already this year, right? Just last night. So I'm filing for someone who is married filing jointly. They sent me their mortgage statement. Okay. They send taxes that they have paid. So the itemized deduction, the charitable, they send their statement, what they give to their church. And then also they sent things like the, what do we call it? Salvation Army
Donations.
donations.
Okay.
And I'm some say how much now donation when I would my and Usha the worth you're saying, what did you give out? Me can't money for the two of them. Like the total was about 21,000.
Okay.
That's the itemized deduction. So straight up,
Wow.
no brainer. I didn't even worry my head about those elements. Straight up, I went for the 27,000. The standard deduction, which is about 27,700 or 200. It's higher. That reduces the burden. So of course, as when you are doing it, you choose the one that will give you the least amount to pay to IRS. So generally, an IRS at one, and they know say more than 90% or more than 85% of Americans use the standard deduction because big brain drew, and that's why when yours is way higher than the standard deduction now. That's what I'm saying. Sir, then you have to have documentation because Enusano, yes, 27,700 if you are married filing jointly now. Enusano now I had to say, hey, a dear Kwana more, your deduction is like 35,000. You get it.
It's more than what they are giving.
What they are giving. Enusano, that's where like now I had to say, hey, a dear Kwana, what did you do? Okay, who will support? And most of the things that you are putting in, bear in mind if it is mortgage interest. Mortgage interest, the vendor would have already sent that information to IRS. So they have it in their database. Talk about charitable income, charitable donations, like the church. those items and the things you donate, those are the ones that they can also send you a letter say, okay, provide evidence of the things that you donated, especially when it's highly inflated. That's where they can ask you, when did you even buy those things that you claim? Especially the area where people milk it a little is the things they know donate, and they super inflate it, and that's where it's like, okay, Atadiana will donate and Oton year ben Omiton 2000. 2000, what shall Atadiana from year 2000
Almost like more than 20 years.
and then you donated it, and now you are saying it costs 5,000. Those are the elements. So generally, you need to be reasonable, and also you need to make sure say you have documentation in case they come for you. But generally, people use the standard deduction.
So
Mr.
Dan,
question was,
is that Dan Dick? One Dick, no?
I'm sorry.
Okay, then Dick say then it's a questionable. What did they channel? Oh, Dan, okay, but who Dan Dick? Okay, I'll say questionable. Why is it questionable? Say,
I'll comment on the presenter and the guy say.
Okay. Then it's questionable. Okay,
Right,
then
right.
if you are okay, all right.
More follow-up questions. More follow-up questions.
Oh yeah. Me will be about it.
Oh, okay. Yeah, Mr. Daniel, thank you for Mr. Daniel. I had another confusion there where your community say you say you're buying move for you be child tax credit. Obu was you, my uncle 3, my uncle 4. Uncle 4 ni na child tax credit. No me nyina na nya bi. And I limited to 2 per. Na limited nso a guarantee certain bia no binya sa maximum no. And then never ma won't binya sa maximum. Obu wana ni income na me fan say 500,000 example 500,000 US dollars. So child tax credit no. Obinya on for some po.
That's a very good question.
Yeah, very good question.
So with respect to the child tax credit, if you have 4 kids, okay, and like I was saying just yesterday, Obia mentioned the tax man nipa no 4 kids. So with the 4 kids, no, currently there's no like cap in terms of the number of kids you can claim, okay. Until our 4 kids, no, each one of them 2,000. So 4 times 2, 8,000. So it means that Sanipan, what happens is that or you use 8,000 no, to reduce the tax burden. But the question is that if the income is very higher, would he or she be able to lower or use or get this 2,000 per kid credit? There are eligibility requirements. They have criteria. For it. So first of all, if your income, like my brother is sharing on the screen, you are a single person, okay, and you making 200,000 by dint of your income, okay, you are making 300,000 above 200,000. By dint of that, okay, you would not qualify for the 2,000. It phases out
completely, or just portion of it.
Portion.
Okay.
Portion, and to some extent, when it's high, you may not even get anything.
Get nothing at all. Okay.
Nothing. So that 2,000, and generally, as like for most of the people that like I've seen, from where we are coming from, right? Most of our people, at least they do, if they do married filing jointly now, if you're 2 income, kaboma is below 400,000, right? So they are able to attract it. It's only recently, like most people are making more than the 200,000 because of the side gigs now, like people are working from home, so they are able to maybe an IT person, 2-3 jobs. Until when you are making more than as an individual or couple, you're making more than 400,000. That means that you may not qualify for the entire 2,000 per kid. So it phases out.
Okay, may I say, last me another question before Mr. Patrick, you are not for other people. The Pamucho, when I'm aware tax for, what is the difference between credit, tax credit, and refundable? Like, it's our words, refundable up to this, like, a war meaning be in terms of what you can get, like your returns, or it's just the normal English word refundable. Like what we are the CT, the child tax credit is also partially refundable up to 1,600. But me say 2,000 mil baby. Patrol, this is our sentence. No, bit me actually the connection between 2,000 and then refundable up to 1,600 now.
Okay. So
Look at
let,
the
let
tax credits, no, right?
Osha child tax credit now. Osha, I say child tax credit lets you credit up to 2,000 per dependent child under the age of. Osha last sentence. So the CT, which is the child tax credit, is also refundable up to 1,600. It was about 2,000. We say 1,600, which is
I
making.
don't know, kind of.
Okay.
Sometimes they're very confusing because, anyway, Danny.
okay. Okay. I mean, breaking it down generally, the concept of refundable and non-refundable first, right? So we have a refundable tax credit, and we also have non-refundable tax credit. Okay, mekano brofo then mama example. Now they are breaking it down, my okay. So talk about a refundable tax credit. What is it? Okay, it is a credit that can reduce your tax liability, the refundable one, to zero and still provide you a refund if the credit amount exceeds the amount of tax you owe. So, in other words, if you have a refundable tax credit and your total tax liability is less than the credit amount, you may receive the excess amount as a tax refund. Okay, so that refundable tax credit can help you receive money back from the government, even if you don't owe any taxes. So, for instance, suppose your total tax liability for the year is 1,500. Your total tax liability, a car would be is 1,500, and you have a refundable tax credit of 2,500. In this case, brother Dan, that 1,500 that you owe, you can reduce it. Your 2,500, which is refundable tax credit, would assume or reduce that 1,500 now. Oh no. And so 2,500 refundable tax credit minus the 1,500 you owe, it will be left with how much? $1,000. That $1,000, because it is a refundable tax credit, IRS is going to give you a check, send you a check that, you have a refundable credit, for $1,000. Now maybe I send you. Maybe I remember my example, practical example where you can get it and where what is refundable and what may not be refundable. Then the non-refundable one is if you owe, for instance, you owe IRS 1,500 and you have a non-refundable credit of 2,500. Okay, IRS will use that 2,500 to reduce that 1,500. But 1,000 kano usanka amumfa mao.
Uncle
Most
Sam,
of them,
Papa.
most of them defer it to
The
subsequently.
following year.
For instance, let's talk about you buying a solar panel in your house. You have a solar panel credit, right? And you buy it. Generally, the government, they want us to go green, right? So they will give you a credit for installing a solar panel, the interest amount. So, for instance, if your tax liability, you have a solar panel with interest amount that you have, credit that you have for the solar panel is $2,000. But at the end of the year, when you file the tax, the amount you owe is 1,500. But you have a solar panel credit of 2,000. IRS Bema wati 1,500 no every 2,000 emu. Ebeka 500. Sa 500 no. Sa credit credit no is not refundable. Into yam farm mao.
Into ebeko he.
Ebeko it will be deferred to the following year.
Now,
following year no file it as na 500 no. I was I reduce your burden by yam farm mao. Bibi to say earn income credit. Earned income credit. We have earned income credit that, like my brother said, Brother Patrick said, earned income credit no is for families who really do not really make much money, right? They don't make they make their income levels are not too high. So for such families, they work a little. There are criteria to everything that we do. There are criteria, eligibility criteria to everything. So like the child end income credit, that amount you would still get money from IRS. Okay, if your tax liability is less. So that is a refundable, a typical example of a refundable tax credit.
Wow. My sister was say wow. Because see nipa bebree nim member gye ayi and then that is also pa that is required and then then bibi
media baby Mr. Mena Okadia na ya
I am said Dan Dick Abaso dan bibi kan
yeah.
Okay.
Me will be kana meet deep.
Sir, what did you bet me at Yanko?
Let me share the bigger crabby because I guess I be a conflict of interest among us.
Okay.
Okay. Adia bakwa mention me the big money say Muko IRS of your publication 17 or
okay.
Questions now we sending answers in our a public document.
Okay. And one other my boy.
Yeah, because
let us see.
Any
line in there. Yeah, see. Yeah. That would be for be any conflict of interest now person can wait to me.
Okay, I did back also say in prep, the UK they have an tax system. You move with say free money and you free money. Prepaid tax. It is a utuyato honomwa at the end of the year. Now what we do a contract say. I do not hear in a scarcity. And a minyan say na what say. Inti after IRS tax software be a use to be a better calculation. You overpay. It is near refund the amount and only tax refund.
Nti nyɛ sɛ yɛkyɛ yɛ sika bi kwa
yɛyɛ
sika
because
yɛyɛ
tax
sika yɛde ato hɔ yes
it is yɛte saa ade no ase deɛ a wonkɔ baabi ma obi nkɔdaadaa sɛ bɛtumi ama woanya sika bebree sɛ that means ɔde biribi bɛhyɛ so ama wo ho bɛkyerɛ
bɔhɔ biem I've seen a situation bebree a onipa no ba say me here 10,000 we are the day also for 10,000 You know, Danny Beckham will be actually up 10,000 na.
Exactly.
No, come baby fufuro. No, I call you 10,000. Actually, near true. Yentiasie, wow, see cow the tour. Yenti, broke out can be. Wow, see cow head.
Now say
Oh.
tax form your friend 1040. So
Mhm.
so 1040. What full information you na see no signatures you the friend of Jura. Se wunya san a wagye ato mu se bibia wo de share so no eye no kore. Enunti na se obi file tax ma no de bibi hye so na ye hu a we ba wo so a wo ne ye beje wo ho ye nko wo no ho. Nti once aye nyina ye behu ate ade na se no obi ntimi na da ena bibia wo de be share tax return so no ewo omo system mu dada. Enunti na yetimi bro letter yes okay ye hu se wagye education credit give us a proof say uko school na school no so be ma 1098 tango uni bia that means one go school na fe wo ho akwachiro then they recalculate it na fe wo be deka
With the interest.
yes and interest no so dey daily because so file tax na a month na e bro so o so tua interest ma o say tax system na ye fair uni mu a hu say ye fair
Bro, and then they had the me no be a kakra. And you fair because you funny say me tax am dey gu ha na at the end no me file a na ye chia ma me. Say ho no man tua hwe ma me o. And this kind of people no one for interest and ka ho. Ana
and on say yeah on say I don't know say since 1911 and no law no eba into existence right enti ayem say ye dey also tia tax.
yes.
It is only kind of 2-3 say me what's na me tia no that be no yes to be na make back but ayem asade it is all file ya na wunya bibia fine wo enya hwe a fine it is wo hunu sa na eno na bia na wo de nibre na wo de bibia so na ho akwatire
That had the say the fairness now okay say a fair no to some extent because yeah funny say see January must start it right. I'm overpaying taxes to the end of the year. So when I file, near who said me overpay, right? Apart from maybe the credit and the deduction and all that. Now I overpay that. I don't even pay interest on that overpaid one also. Nemum semi I pay taxes so. Semi na ke kopa sa adi anka me so. How the M say also mo ye kakra.
okay no yeah what's a tax bracket no na yeah na di no money na ba so
but no mami min tira ma adwun kakra unji ndi se no de o man so man se fa o sika be femom wo na wo pe na o do sika be femom ndi no mo do sika ma but in this other instance I ka se o mo de o ka no o mo no ma o mo on dia me cho no o mo na typical o ma de o ka ngen de so mo de o ka
na omo bro check ra na ko yi check na sa asemu ye hwe de CPS de be ma ye hwe dani de se na be ka fa ho dani na se na wo be ka fa do
Yeah. Generally,
ye hwe wo de ye hwe de dani
generally,
ka fa ho
so generally as
is mo ha me pa mu na ye dani miensa okay go.
Yeah, generally as far as when it comes to the refund, whether it's fair or not fair. I'll put something in the chat right now as oh, let me just put something in the chat for where do I put it? Chat, join chat. How do I? Okay, let me put it there. And
We'll just hit on comments.
you can put it there. Yeah. So basically, for people who really, there are people who love it when they put money. They give a lot of money to IRS to save for them, so that at the end of the year, IRS will refund them, because everybody and how they manage money is different, right? But generally, most people like accountants like us, right? I'm not really. I know how to take care of my money, so I'm not expecting IRS to refund money to me, huge money, especially when I know that huge money I can make an interest of about 5.23 or 5.5, right, on it. Just putting it in a normal savings account, online savings account, can give me 5.5 interest rate per month. So I don't see why I would want to farm my tax and get 6,000, 7,000, 8,000. No. The reason is that I know how to take care of my money, so I wouldn't want IRS to save it with IRS. And the way I do it is to use the W4 calculator estimator to be able to estimate how much I'm likely to owe at the end of the year, so that when they are deducting my taxes at the end of the year, it's a medical crime indica baby, and I say there will be a refund. It wouldn't be that significant, right? So the honor meti brother Pata says, I'll give so much money to IRS when I'm not getting interest. I would not really personally, I wouldn't want to give so much money in taxes, so that at the end of the year I get so much refund. I'll calculate it so I get a little, or maybe I owe little. But there are other school of thought too, that there are people that sikano edahwa just say be on who sika said that the service account.
Obedi.
Oh, it's here. And now it be the best and you'll be Ghana. And now until these save, they don't like how they handle money, they can save. So this is also a means of them, saving money, a means of them like putting their money aside. Of course, it's not the best, but to them filing to get something. And like our brother said, it's your own money. What has been withheld from you, that is being refunded. But it is not always the case. Sometimes you have credit. It's not just always your own money.
No, yes.
Depending on your tax situations, depending on your tax situation, you can have like if you have earned income, okay, tax credit. It's not your own money that you put out there. Because your income is low, IRS try to also help you out. That's why we have earned income tax credit. And also when you have kids, that credit for child tax credit, it's not your own money that you can get to reduce your burden. So it's really every situation, it's different, but you need to really choose the option that works best for you as an individual.
See, the first time who said Ubianya credit back, not the why I say when you credit back. Now I was shocked, because now in my community now, time never saw ye this guy. The boy full serious. Why? Because this guy they are to any interest also. And son of me before say Ube who said anybody there, but ye didn't see a quadrini giscana near aje near jubility. And he says, and I be bracing himself that's a scabbing near the chair. Mrs. Kevin near the chair. Said a friend saying, see, Kramekan saying, DNY, na danana yawe can say, I say, one happen I do seek out kugo, it's your dear no may. But if he said the fairness, Nana Kaim said, dance, so can say, I say, I tax near fair, no think, also come see you was an also to me chaby.
Fairness now make an own. Make kind in terms of say when you are being audited. Now
okay.
Claims be no one auditor no ultimate the shasuma.
The shasuma, okay.
Yes, so Timika said, oh, you didn't claim this. So I'm going to add it. But you were not supposed to claim this. So I'm going to disallow this. Into Ubo, obet me out the 2 we, Nanka be already can be a bit 2,000, but obet me out the 2 we know when you're 200 back. So,
okay.
And then I may kind of say fairness.
Yeah, fairness. And the true mom, they do as much as they can possible say, omo nye ways, but yeah, mostly idea how to trouble be breed. And also, idea, to say the me 10,000, we end there because we could trust as if you say, with me 2 or 4, it is 10,000 in there also.
Yeah, and idea back also was a study and said, Obi file or tax mawa, sa 1040 no, it was a DBIG copy. One G copy now down one, Obetimia or Tano.
You mean before say, Obestin the Akonana?
Yes, or file more now who say, Ubenya $5,000 back out, right? Obuwa on click send. Obetrain uko ria no wa altano and san was send or send ya onim do obeye. Of the split refund ebetoso F888. It is a 5,000 OD can catch on woody and no wood trim. But what the BBS says, so I say 2,000 back on 7,000. But why a split refund? And what the bank account me no atoso. It is send this kind of bro the 5,000 bro. Into no criminal when you're 5,000, but not 2,000. I call on so. Manya,
and he says serious too. This
people, my numerous cases are be African brothers, no, and I can't do anything about it. And no, and you met my catch on said it was all bad report. One bad report, so I assume to me go or the tenors are so on the metron.
Yeah, let me come in there quickly. And so basically, this is a situation where you end up giving your tax to somebody who is not. So we are talking about qualified people doing your taxes for you. So if you are talking about a CPA doing your taxes for you, that person is being regulated. Nobody, and I'm yet to see, unless maybe you're a billionaire or they are going to make huge money, but to put their license on the line for $2,000, $3,000, that means that person has a cycle. And that's also the reason why when you go to the person, if you let a professional person prepare your tax for you, just make sure that that person understands what they are doing. First of all, make sure this is a qualified person. A lot of people prepare taxes, but they are not regulated by anybody. Okay, they are just preparing taxes. There's nothing much at risk for them. But if you have a qualified person going through for you and it's an established person, I really, unless maybe they are making, but the question is how much? The cost is too high. Now, with what my brother too is saying, one of the ways to help you is when you go to the person, it's good to ask questions. Let a person explain it to you, educate you. You can even prepare taxes on your own, going through if you have a simple tax. But if you let somebody do it for you, let a person educate you. Make sure you understand, like he said, before you e-file, make sure you understand the work, the tax. Own it. Ask questions. It's not wrong to ask questions.
But layman, your community, your fancy, your mommy be when you kakra. And I papa be when you can yeah papa krana obi a won the name system no hard we I know say you to say you can say it might be insane to put your license at risk, right? But some people might do it. Some people be bit me a pa because from here when you if I saw or your man for be 300 crown when you 2,000 for be as well. It's money. It's not more like 2,000, 2,000 times 300. It didn't beat me, but it's a tough pass. Be a winning system. A big crown now, or crowd, the Unima said in a task of final Kujato no.
It's true. It's true. It's true.
Yeah, it's scary. Sometimes we say it's very scary. Which we are now one year could be targeting nipa ba could be a unimshi every year be obeying all the time. But I understand most certified people might.
Yeah.
Most certified people might not do it. But we are here's situation saying our system, and I say our community no tax preparers in the also. Just tax preparers near CPAs near qualified for almost a bit me. Anyway, thanks so much, Danny, for a very enlightening part. Oh, be the things we should watch out for, so and also any bad with the tomb. It didn't be that Danu say you watch out for the things that you guys see. A community, no, you're funny serious.
Mostly now, just these minor things that CPA boss nekana. Uko nipa no ho a e wo so hu nipa su a wo kɔ no ho because ono no ye wi a wo na wo sign yo wo na ye be ba wo so there are so I'm of Austin ha me we nipa bebre ba me ho a obeba na asem na sie wi mitimi nya hwe mfa ho biem so hu
etimi nya because wo nya de because ye de bre wa wo nya hwe
oh me si akwa bi obi a also oye yi o penti dan the whole year also what penti efie mienu eso mileage what she be you know masa adi we antu ye so was in no na ye obi na ye man no say what sign it there but say case na ba bontin dem metimi aka ho asem but the ko animu no on say CPA no be onim there were several cases and there were criminal cases no civil case no kra de bakora anyihu unya letter na mensuru hwe so kan ade no the information be no pay free so who provide there most of the time no you obey you no na on de cat said de ehunu huna no me especially here auditors me solar me G solar me claim credit no you bring me letter audit me
auditor
oh yes because who na audit am for until we see who say who integrity so and one say me printing me Google picture of the top of my roof and a contract now me decor me J we no solar no the submitting in na so no change simple but unya letter no na onye hu IRS na yam hwehwe na wa tenitorator eno ema auditor no kra another different mindset say okay any bi ODBC
my question back will be the balance say him say 2021 or finally no him say now was say or a side gig be na also the count him say a month mo say the reef no fan ka ho nti after say 2 years no no the exact amount na revenue no almost untia sa amount no nipa sande no nye
who said you say who file tax ni we are na W2 and I said 1099 be back.
Yeah, we know we 1099.
And once obey 1040X amendment. But so we
one and I feel no much no.
Yeah, over 3 years to amend. And CPA.
That's correct.
Yeah, over 3 years. And within 3 years, say 3 years ni twamwa. Na say wo ye amendment na say wo anka wo refund a yentua
but say wo dey
it no na was you say yeah you was statute of limitation you what time are you betimi audit to and you what time are you e betwam a yentimi audit to but say done criminal a done crime dia e be and any expiry date
civil one there will limit civil ones no limit
civil ones no ewo a statute of limitation.
Statute of limitations.
The one yeah, yente brofo lawyer for brofo. The one
Daniel mo CPA, like muko mo hosana, they know what they do. Omotias adena say. Publication 17, make me know say revision here for 2023 publication 17. Mr. Daniel Lai say me so when from head to toe when be room onim ko betan akoye research enti nipa bi saa no na wo say you two and amount call mo boy obetumi asan kire how to file it on your own yeah na enye din but I don't know anyway.
Yeah.
But I appreciate this program.
Let me chime in really quick on one of the things my brother is saying. Generally, like he said, most people just rely heavily on the tax software, right? On the tax software. You should be able to even calculate how much tax is due without a software, because that is what I would do to test the software whether it's making the calculations right, because you know the rules, right? So I do Excel calculation on the side, especially when I have to talk to a client. I will explain it to you, and to the extent where I have people that I have lost some clients because obviously they feel like, okay, it's not really, but I like it that way because of course you know that as you are growing your business, you have a business, you'll be able to come back. Okay, one thing is a main thing is like fashion. If you don't add what they are doing, and fashion mommy comes in because their thought is that it is the CPA or the tax filer who is going to bear the responsibility if there are mistakes. It is not true. As a CPA or a tax filer, your requirement is to make sure that you corroborate or you have a reasonable belief that what the numbers the person is giving you is correct. And so you are not required to say, okay, if you say you gave charity 5,000, the tax preparer has to just make sure he has notes prepared to indicate that I followed up with you and I ask you, do you have documentation for the 5,000? If you say yes, I will document the date, the conversation we had, the time, because I have to cover my back, and you have to have the document for that. But most of the times what happens is that I've seen situations where maybe they might file with a genuine person, but they might have had a target. I want to make 20,000 or 100,000 because our building project. Into what pushing this person and the person they are pushing maybe may not really be a line or not or per se on retaining client. As a matter of fact, I don't file taxes for everybody. I don't. Yeah, I want clients, but I don't file taxes for everybody. If you are too aggressive, I want you to go. I don't want to bear too much risk. I don't want to have people that I will file and they will have many issues because it tarnishes my business. Because through you, I'll get a customer. But if I do it and you're having issues tomorrow, what will happen is that you'll be catch no be a catch no be a catch So, and when the issue comes, the truth is that people will not tell the truth. Say he told me that I should have no on canisa. Catcher said nipa no filing me tax no chale wanya dia. Kasawa no, people change how they talk. So one thing generally is that let's not be too aggressive. Let's not be too aggressive when we are doing we are filing taxes. Don't be too aggressive. Don't be too aggressive. Be reasonable. Okay, if you are putting something in there, make sure say you can you have support, because like he mentioned, there is interest. From the date you file the taxes, they will calculate interest on it and you have to pay. So the aggressiveness sometimes is what lands our people in trouble. A bit more hard when they come to you and you want to even explain things to them, they don't have the time. They don't want to listen. All they tell you is that this is what I want to make. Would you fashion money? They will not take the time because they filed this 6 years ago, they lied and they were not caught. 5 years ago, the same. 3 years ago. So it's like it's continued, but as times goes on, it can catch up with us. So let's try to really be very, sika obedie no china wa fidie. Come on, let's be reasonable.
Before then, your friend is saying, we need to chat them. So first one here calculator no, will be on PC a bit more. Your brother Dan lie SNA chat no calculator no, and your brother Dan the other one also send your friend is saying, the 17 no, your friend the public 17 no, publication 17 and so on. More information. Yeah. We'll see. The Biamika say. Say no ya doso o si etimi church ho niam na hu niam a bebre na first yenye na etimi boa na free ayi bebre mu because so hwe niam kakra ekoso na se ne auditors e kan ade a na say mu bebre ha ebu ye fa so na meche no yenko dan ai nana o question for mine. Are you ready, Dan? Amponsa. Yo, I'm saying other question. Question. Okay.
If I show obetimi advice say, is it advisable say Afibia follow tax with the different people? And now say advisable say the oil amount no nimu situation constantly, what the man easy amount than say what's na me dia mawe, what's na me dia come away, like software no we use, I don't think say it's the same software that data no who previous like what the different people are able to see all your previous whatever in the system unless you was 10 no 10 14 whatever. Advice ben what because me yes nipa do na request is 10 14.
Yeah, generally you have to, once you file tax with somebody, you need a copy. For copies you need there are a lot of reasons why you would need it. Filing, it's a requirement in certain filings in the government arena. You will need your tax filings. Okay, so once you file it, there is the need to obtain it. In case you want to change your tax filer, yeah, you have every right to change or give it to whoever you want to give it to. But me personally, I want to see your previous tax filing when you come to me. I will ask you, okay, most of the tax softwares, you are able to import your previous tax filing. And in situations where I cannot import, what I do is that I want to look at your prior filing, because that way, when I file for you in the current year, I want to do comparative analysis to understand why is it that here Uklemi is saying that this year you are putting in expenses for this. I'll ask you questions about it, because you have to do flax analysis. You have to do those flax analysis to understand what's happening here, what happened here. And sometimes there are people that genuinely they forgot that, they claim this. Sometimes they, of course, like Dan said, they could be triggers that, you missed something. Last year you put in this year you forgotten to submit this document for that. Or probably, no, you did 5,000. This year you are putting 20,000. How come last year when you gave it to maybe this person was able to stand their ground that, no, 20,000 is unreasonable, like bring evidence, and you couldn't bring evidence, you couldn't give the person the evidence, so they put in the 5,000 for you, and then you are like, next year me filing with you. You go to the next person, and then you go and tell the person, put in 20,000. The moment I do that comparative analysis and I see it, I will do the same thing. I would ask you, why last year 5,000, this year 20,000? What changed? So it's important, say, like we ask questions, and sometimes just let's be fair. Even this tax filing thing that we're talking about, what the tax you are going to give the tax, preparer is nothing to write home about for this person to be so much, like, but like to say, oh dear, to say I want to retain this client. When you are talking about bookkeeping, no bookkeeping, the tax filing in there usually is kind of unless you are doing business, tax filing. But individual tax filing, 250, like three, those things are not really huge beer to really want to put your business on the line for one person's, so it's and then also there are reasons why people change their preparers. Maybe this preparer, is not straightforward. Or the man ochna, oh, me numbers, ochna tomorrow, ochnechi. So it's dragging, right? And they feel like they are not really getting good service. But the point is that if you have a trusted, it's great when you can continue with somebody who is a trusted person. It's the best because they would understand the changing trends and they will be able to advise you even better. Because I don't see any tax preparer who wouldn't want to retain their client by providing them with basic things to help them reduce their tax burden. Like we spoke about, if this year you owe taxes, they can advise you, oh, are you contributing to 401k? Some people do Roth. And if you are doing the Roth this year because of your tax situation, I would say, okay, you know what? Change it to the traditional. Okay, defer some of your taxes because you are making so much this year. So that, so all those things, at least you can have that, open conversation with the person.
So just not because you came on the rough and that, what do you call it? Pre-tax, whatever, 401k stuff. I know there's always a maximum for the year, right? So assuming somebody is doing 2 gigs, and then when you combine the contribution, it's above the maximum. In that case, what happens if it goes to the IRS? The person contributed more than he was supposed to contribute for the year, and then there's been reported to the IRS. When you file your tax, what happened? IRS is going to make you pay tax on the additional contribution. Like, how does that play out? I hope my question is clear.
Yeah, it is clear. Yes, and you answered it as well, right? So we have a limit that you can defer. We have a limit both for the Roth and also the pre-tax or the traditional. Okay, so if this year's limit, you are contributing this year, and then you are doing pre-tax and you went above it, what happens is that, yes, you've gone above the limit. Most of the times, I mean, for organizations, if you are doing it through organizations, an organization, they will make sure like you're not going above the limit. Most of the times, they will make sure, unless maybe they have ensured that you are not going above the limit, but you on the side, you have your own individual IRA somewhere. So that one, when you put everything together, you pay tax on the excess. You pay tax on the excess. Most of the times in our, our people usually don't.
Yeah, I was so sad to see. Oh, brothers or sisters receiving 2,000, actually 7,000. It's so sad. Your brother in Neka. Sometimes it's sad. What you say, that is not just to cut you off. Go.
Oh, sure. Sure.
Yo, your friend said that Dan. To say there triggers now. I know so now cut triggers. Triggers no. Be need here. Just say my triggers maybe, Ebi, thanks for joining. Daniel now call. And that comes on my
I was just picking back on Mr. Lai. Njano Okase Obanehwa, it was so previous 1040 copy. And no buano emani hu ujinabia. Because said this year me make 120,000. Not the following year no bad. Ma make 150,000. I don't channel ba pipeline anymore. A bit a court review. I mean, who say, we last year 126 30 be a beca. Inti a year you can cry because ima any person you promote one or multimillion straight 30,000. So,
Hey, anyway, we are my summer bow.
and no money be no. And now,
Eh,
Obi or what? Or so me.
hold on, wait, my Mr. Pohansa before so to us. It's in that situation, no. The passano, a dear no one year. Because
No, and no interest why you bonny view. Who say auditor biano, they are curious. They want to know why. Every time guys when you letter now, you need to explain to them. Would bet would informate okay, didn't na minya 30 car. So me koto car 10,000 and I'm a ton 30,000. And as I'm a koto car 40,000 I'm a ton 50,000. There are enya de esi name me was so chirichirim. Oh, I don't know how kind of substantiate. So
it's a situation whereby say it be if say a job, right? It be a job of 50. Now what's saying 50? One another job near 50, and they say clear because the W2 or maybe the 1099 will show, right?
Yeah.
The different one will increase. Okay.
Okay. A third party database or what you bit me pull information on. So no go what baby a free no or mutimi delay maybe any system nim. It was a query. But maybe as at time was when your W2 no that. And once all the copy I can on the more or the anantanase. Usually crano, if you go to the office, they sit with you and talk. So when you're small business I have about and a large business I have a year. You just send them a copy and that's it. You are done. You do also 1040 no or mano or ma 5 train a bit me 1040 so you have to add additional paper. So into what no be a dada no when a man cry bit me the not 2 way so forgetting say o bus system ni mo e bit me query and who say we a way back and I we new way back. So
Any tire power.
And yes, I want to mean you should be ubet me.
I was because prove the chance.
Share for 12 months now. 6 months, and I'll doctor CPA.
Yeah, 6 months, half year.
6 months now. Ubet me, but you need to justify. So, but
I say they will when you justify, and you justify, but then more to say they was well sound crank a crowd.
But say also want to be a proof what now on change 6 months now. We know ready for no. And
but said you okay now. I didn't say, but yeah, 2,000, 7,000.
They pay too much to even audit you. Into your almost to a threshold, but you want to go back to 3 years. It is a maybe I would 10, I've done it 30. Maybe I want committee threshold. I have audited.
It's already almost spending a crowd, almost spend it by 5,000, no much me almost 10,000 back. I said at least. Your friend said, I'm 30,000 back.
And like my brother said, people also out in the back of Ghana, sir. Can you believe that we have people who take their kids to Ghana for over 8 months in a year? Yet they want to put them on their tax filing.
Now, I'm no
10 years. Obit 10 years ago. What different?
Now, IRS one. Mebano said be sort of Afghanistan and not Somalia. No, men are making step. The fiscal location. Why does it matter for tax purposes?
Okay, so they have rules, right? They have rules for every one of those taxes. You know, be it credit or the deductions. They have rules. The rule they have is that for you to have a dependent. And if they don't have that rule, then if you are working in this country, let's say you have a child in Ghana who is not even from here, right?
No, but say no. Say then I might be proving some about. Say the social security might be proving so. Until rule no be because be provided the social security no.
No. The rule is that if the person stayed with you during the year more than half of the year. Ubetimi are using aphalitas. But so Ghana, okay, more than half of the year. Just say on new chain. And rule me see if the person is not with you for half of the year, you cannot put them. There may be very, very limited exceptions, but generally you cannot claim them. And bear in mind, only you call Ghana, no, just that sometimes the systems don't talk to themselves, but if they really want to know, they can know.
Yeah.
Because only know for immigration. If they want to know, they can know. Right. So those are some of the things that when, and especially Assembly, you get it. Assembly, then there will be second question. Where where is this person? Do you have that?
I would not file 10 years. 10 years in your together. It is you.
Yeah, and me, I'm some material can as I said there are rules there, but maybe I'm trying to now think beyond maybe the IRS. I mean, to person me say IRS. Minimum sabu nyina mo nyɛ adwuma IRS ɔmo hyehyɛ no ɔmo ahyɛ. But person bisa IRS wɔn sɛ meba mede na aba ha mede na akɔ mea na mehwɛ no still baabi obi a mea na mehwɛ no wɔ mea na mehwɛ no. Nti regardless of baabi obi a mea na mehwɛ ma adeɛ. Nti ɛno no dey nti na ma wotimi restrict me so ɛsa ne sɛ ɔnte me ha physically wɔ America ha no ɛno kyerɛ sɛ menhwɛ na ana. And a question for maybe IRS for no so ɔmo kyerɛkyerɛ mu na me principle kɔ a ɔmo de demarcate saa rules no, especially in today's age of globalization. I don't even know. And whatever.
I said the rules, the rules are there. If you play in any game, you have to first know the rules. The rules say you cannot if the person is not living with you more than for instance 6 months or more. If I'm right, Danny, yeah, you cannot. If you cannot, I said you can. Let me say Irish for so.
I mean, one of the. Sorry to interject. I mean, we have exceptional cases, right? But they are very few. They are very, very, very few. For instance, if my child is here and I was filing for my mother and father-in-law, right? And their kid or my sister-in-law didn't school here or school or Canada. So if she is in Canada for more than 6 months, you can still, claim that person. Okay, because the reason is just temporal. Okay, so because the child is away for school. Okay. So that is, or probably if the child is in the custody of another parent. So maybe more two, maybe back or Canada back or her not call more than 6 months. So there are limited exceptions, regarding that.
Okay. Now, maybe so IRS no on no one or can buy one no buy agency or no you attend separately no attend the baby now or check you be including a buying and agent of a buy because the interview is it to be able to Congress and a Senate. You see, you have my IRS when she come and wait me audit be audit yes kafona kesia no na buying sika. Now go for me so to work so no embese mo sika mo mako ha sika for no mako. It's the IRS or age mama ban so age mama ban.
Oh yes, so the IRS is part of the United States.
It's part of the government, yeah.
Yeah, the revenue, service
body itself to say that yeah, independent by.
They are under the Department of Treasury. So if you work for the Fed, the Department of Treasury is more or less like they pay us, right? So IRS is under the Department of Treasury.
So why is it hard for the Congress or Senate to give them enough money to audit the big guys, like the big company? Why does that become an issue for them? They don't want the IRS to help them generate money or
audit Okay, say na IRS I break it down. It was civil cases. Civil cases, just regular cases. Okay, we a mistake be niama escaping to your back. And I work criminal cases. Now some of the cases na and shut down by public domain. But so we call Google now about IRS civil or criminal cases na the na it me you can read who say yes I'm for tua restitution. So if you cry now toy na a true sa no money be it me jiffy influence them. Eti ye the two na enche da nye common se ubetete because omo di CC so omo dem tro na ha ba se nya ba ye nya wie case ni nyina na uko appeal process now that's what differ omo timi publish it nti ye the two omo pa
easy we the em say agro no the na time so call
eti ade ba ko dependent na de no ho so oba na te Ghana or that's so you dependent on say wo file form na minim say mama file mo tax dade a you busa said did the child live with you for 6 months you were yes and no o clicking no the only thing it will do is say child tax credit no unya but or you're dependent it will still reduce your tax burden. But so okay, yes, Nadia, what's now going to qualify for other credit to be any question? And I'm like I said, publication 17, who redeem one in now. That is your tax Bible, be beer.
I think so. Yeah, our position makes very good sense to me now. Not just say, yeah, if you're still a dependent, just say, "We now can be other name maybe a can," but they still make provision for something. If you are between then that looks like it's a reasonable pathway, right?
Tax credit no tax credit say not danica no no sika e bitimi about even crowd the car teso na bro bi but we say a reduce be your friend saying o tax in asa we say no nyiska wo any reduction you the amount it's no na waka says we pushing no media obinya no but you won't get the monies now account e was e baba no e hoso na say when scan wo it will be happen to draw why yes so kokra na me koda ni ho na me ba wo Ghana say and I say me country no but was say me catch no ko no edi hu djuma ma me
yeah we dey my last question be na me bisa tax me state call but me dey me Maryland ha me hu say me file me taxes bia na ma file me tax bia me nya me refund me dey me sika to mo di bia brem no refund na me nya no na State of Maryland control asade sa refund na minya na asaba say income me san fan file me san fan come income file me tax for the year. I'm like uncle Foy double taxation and I say then the cost minim say what's the question na be sana now we are familiar with sa or the same we return now binya no the following year control and be san the
state no
yes it's not the
for the state no yeah Danny answer obeti answer that my
yeah.
I am not aware of that federal tax income being double taxed in Maryland. What I know is generally say
state no state tax
yes
state no state tax
who itemize there, especially from the state side now. Who itemize here now whatever you get from the state, especially when you itemized, that's where in the subsequent year you end up paying taxes. But I'm not sure about like the federal, like with standard, and then you're being double tax again. I can look it up and then get back to you.
Yeah, so are you not talking about the state in the brown? What
right,
what's almost have bros like small phones yeah. And suddenly you're not using it for filing. Also, what you do from the states, no, the previous tax year, no. And then now, okay.
Yeah, no, I make almost sound the bro. I don't know, say no some person the count current tax year.
Also file as I could just I will say the unya for the last year,
No, I'm treating like as income. Say no see income, I bet so the count. income for the
And I said,
reporting whatever. Yeah,
and I said
now
income,
filing.
unya income, it's in a better tax, and where you cost through.
Is
Income
it
when you
from?
cost.
Is it from? So you're talking about like when you file your taxes with the state, and then in the subsequent year when you're filing, you need to include it in your federal tax, or the other way when you do your federal, you include it on state filing. Which?
I think the state filing, like they bring you the small from the controller, whatever return that you got last year, they bring you another that same, and then I don't know whether they want to treat as income. They state somewhere that if you did this, then you must include this. You know,
Generally, the instances where I've seen as including in it is where you do it itemized. Okay, itemized. That's where I've seen a situation where you're having to add it back. But with the standard, generally you don't add it back.
You don't got it. And then do they use the state and the federal? Do they use the same tax bracket, or the state has a different tax, whatever you call that effect?
Yeah, they have different, and every state has different state tax brackets from the federal. They are all different, and even some states do not even do state, you are not required to.
Yes, some states don't have even a federal tax, state taxes, right?
Texas don't even, you are not required to file state taxes.
Oh, I see. I didn't know that. Okay, thank you.
Sure.
Yeah. And that like my last year dan la my last year na yemfa end, especially whereby you see because you be on when it comes to filing taxes near the na ye kra scanner ni here me 10,000 ye ne den a obekọ be fufuro ne obekọ akọje 10,000 ti my yi kakra na yemfa end.
Yeah, maybe the meet me, I can say, you're careful about the system. Whatever we do, obiti baby a wohu baby. Now, your friend say, you say, you bet, shimua, you auntie. Omo file tax, say, no edu a quota air course, me PC, no, or say, Omuja, yes, ada before mo kon no maso be yes pa
Yo me nya hwe yo dani so dia na wo ma yen say ye ba obi say ye ba wo kwa dia na wo say ye nyama ready dia na any say dia wo say expect na dia expect yemfa and baby wa yemfa nto nchen ma ye kakra.
I think one of the things I will share with everyone is whether you prepared your own tax or you go to someone like myself or whoever, one, make sure you understand what you are doing. Make sure. And especially when you are paying someone to do your tax for you, it is your right to ask questions. Asking questions doesn't mean you are dumb. It's good to ask the person questions. Say, why this? How did I get this? Can you explain it to me? They have to break it down to you to explain why you are getting what you are getting. Okay, that would even help build that confidence. Make sure you understand. And right now, like my brother said, Obligation 17, and then Google, we have a lot of AI tools. You can always check if the person is telling you the truth or they know what they are doing. Okay, so it's very, very important that we understand what we are doing. And then secondly, documentation. Make sure, say, you have documentation. Have your back covered. And then thirdly, most of the times people don't get paper statement in their mail. Most of the financial institutions do have statements that they upload. And sometimes I've seen situations where people forget about, 1099s, interest, income, and all that. They sell cryptos here and there and they are forgotten. All right. When it's above $10, interest especially, they report you to the IRS. Right. Make sure that you are checking to download those items, especially people who like to file their taxes early. Sometimes they miss some of the statement because some of the financial institutions don't publish those statements on time. Okay, so make sure you gather those statements and then also file. Like my brother also mentioned, when you file, make sure you get your 1040. Make sure you get it. And then if you make a mistake, it's okay. It's okay. When you make something, it's okay. You can always correct it, amend it. Okay, within a year, 2, 3, you can amend it. So when you make a mistake, it can always be amended. That's all I would say.
Thank you so much, Dan and Dan. Thank you. Affirmation of the week: I'm capable of making healthy choices. Start making healthy choices. I'm capable of making healthy choices. Thank you for joining. Arthur, D, Mike, all of you. Thank you so much. It has been a nice discussion. Next week we'll be talking about the state of housing. The state of housing. Frida, Miren Few, thanks also for Danny Adieba Kwayanye. Yamfa number and tuja. Please, Danny, for information tuja na israwana manfo ntimi anyway. I mean say hey, and the other Dan there, yeah, hit me. Why? Dan lie for number tuja na manfo hey. Oh, Juana, Dan.
Yeah, I think I put it in the private chat instead.
Oh, okay. Yo.
Yeah, you can put it there for me.
Sure. Yo, Dan. Dan Ambani.
All right, thank you.
Yo. Thank you all for joining. Yeah, Munya mon pick Dan we straight after doing because I'm good. Obe make sure say we never did a year. Obe make sure part said you can obe fisa grow nudi. O kona ko han bibra o nyema. Ope omo pe mi nyema fenchem. No make sure say bibia obetimi anyama I was say deduction ne credit nya de ne de ebe ya amount. Yeah, sometimes yeah hu hia cross over for so no na be say anyama nyama. Mo hitting up 571 492 8292. 571 492 8292. Daniel Lai. Yes, very good man. We're happy in that. Next week, said kind state of the housing as I see woman. And Ebeka was Munaya Mun join it na yenye fe mubaso mama questions na and also because I was here hit you with the questions no na umutimi answer my inya questions na in fan share ho keke. Yo Danny kind of send me a number no why. Yo so make a munya say end waha but make sure say you spend wisely, save intentionally and give. Your boy Patrick Buffy. Sikasem. Be next week. Bye-bye.